Welcome to the All Financial Hour podcast with Steve All.
You know, Steve, even with the stock market recovering from earlier swings, many Americans say retirement is feeling less certain. A new survey actually found that 9 out of 10 say inflation or market volatility has already changed their retirement plans. That survey is from Live Career, by the way. And about 75% say that they're delaying retirement altogether as many pull from savings earlier than they planned. So when inflation and market uncertainty start pushing retirement farther away, what should people focus on? And then most importantly, what mistakes should we avoid?
The biggest mistake that I think happens at times like this when we have uncertainty and inflation are emotions. That's the part that we cannot get out of investing and retirement, that emotional roller coaster. If you'd have looked back prior to the problem in Iran, markets were up. Everybody was excited. You know, we'd had 2 years of 20+% returns. Now, all of a sudden, when we're at that height, I really don't need anybody. I don't need a financial advisor. Everything's going fantastic. I'm going to retire soon. Then as soon as it made the dip and started going in the other direction, oh my God, what are we going to do now? Then the market starts to fall and emotions kick in. Wow, I'm so big of a time away from retirement. What am I going to do now? So we look at all of those things as it comes into it. And then what happened at the beginning of April? The market starts to come back up, and we have one of the biggest returns that we've had in a very long time in the month of April. So that emotional roller coaster is what gets people going. Uncertainty causes what? Fear. That fear of running out of money. I can tell you I've met people with multiple figure retirements, and they still have that same fear. Will I run out of money? It's amazing how that can happen. You know, and a lot of people all joke, well, there's not really a chance unless they do something very different of them not having a successful retirement. But they still have that exact same fear of not running out of money. The other thing that's going to hit is the inflationary side of it. Is a lot of people think about what's going to happen to, quote, healthcare in the future. The good thing about it is that Medicare is limited by the inflation and the increase in Social Securities. As I've stated to a lot of people, once you hit Medicare age, you figure out why the government's broke. Because of the fact so many things are covered under Medicare that when I was in a corporate plan, it didn't really cover. So I got two options when I get to Medicare. Do I have a Medicare supplement or do I have a Medicare Advantage plan? Do I get it free and then when I get sick, I pay for it? Or do I pay a little bit each month and then have very low deductibles? So even though healthcare is a major concern for people when they're looking at their retirement years, they don't realize that it's not as expensive as they think it is because of Medicare. But I can promise you the cost of Medicare will go up. So I start to look at it, where's it boil back down to? Emotions. Where are you at emotionally? Are you talking about your emotions with your advisor? Are they not calling you back? Or you really don't have anybody you can talk to about it? I'm going to say, give us a call here at the All Financial Group. Sit down. Let's do that risk-reward analysis. Let's do that comprehensive retirement plan so that we can actually look at it so that you can focus on what's important, a long-term plan so that you can turn off a lot of the noise that's going on day to day. Give us a call now. Ask for that comprehensive retirement plan.
You're absolutely right. Turn off that anxiety, that noise, things that are keeping you up at night. Get those questions answered. Take a deep breath, and that's when you can do when you put together this comprehensive retirement plan. That phone number, 636-230-8824, 636-230-8824. And, of course, that website, yourmoneymattersstl.com. Jeff Foxworthy, we all know him. He didn't grow up dreaming of being a comedian. He was just the funny guy at work. So his friends actually pushed him into a local stand-up contest back in the mid-1980s.
I was scared to death, had no idea what I was doing, but I knew a minute and a half into it, I'm like, this is what I was born to do. And I quit my job, and my mother's first question was, are you on the dope? I don't know what the dope is. And I'm like, no, I'm not on the dope. I said, Mom, I think I can do this. But 5 years later, I'm on Johnny Carson. That same mother said to me, you know, you wasted all those years at IBM.
Just, you can't please some of them, you know? You're just trying to do it all.
Hindsight's always 20/20.
It
Hindsight's
always is,
20/20.
Mom. Families don't fear the dream. Of course, they fear the unknown, and we talk about that all the time here on the show, Steve. So when a client's family maybe is a little skeptical about a loved one's retirement, let's talk about the process of walking them through so it doesn't just feel like a leap of faith.
I think the big thing is meeting a couple together. We'll get a lot of times, almost every family, usually one of the two is, I pay the bills. Maybe not the same person. I do the investing and I follow in with all that. You know, so a lot of times we'll hear that, well, he doesn't want to come or she doesn't want to come because I do everything. And it's, I wish I could say it's always one or the other. It's not. So that's why I like to bring them both in together, because I think it's very, very important that when we speak, that person that might not be the person that does it all the time, they at least understand it. Make sure they understand what's going on and that they've been heard. And that came to me before I got in the industry. I was interviewing a financial planner many years ago. And my wife and I went in and we sit down and we talked with this guy. And we come out, I'm ready to hire him. I just signed on the dotted line right then. If we got out of the office, my wife looked at me and said, I wouldn't do business with that guy for all the tea in China. And I went, why? We were in that room for almost an hour and 15 minutes. He never looked at me. He never asked me a question. He talked to you the entire time. Mm-hmm. And I have never forgot that my wife needs to feel heard. She needs to ask the questions. So I believe that's very important when somebody's coming in and they're thinking about retiring. A lot of times it's a lot easier if you both don't retire on the same day. Let one person retire and then have the second person retire. But having them both know what the plan is, when are we taking Social Security is usually the question everybody asks. But I would rather they know, why are we doing it the way we are? Why are we investing the way we are? Why are we looking at Roth conversions? Because I think the why is the part that's very important. And a lot of times the person that's not the main decision, knowing why we're doing something is very important. They don't really care about the minute details around how it goes. So I believe that both need to be heard. If you're in that situation, call now. Ask for the comprehensive retirement plan. Allow myself and my team to sit down and make sure both of you are comfortable with what's going on, because that's going to make your retirement and that transition from working to retirement much simpler. Give us a call now. Again, ask for the comprehensive retirement plan.
Get the answers to those whys. And when you come in for this comprehensive retirement plan, again, that phone number is 636-230-8824, 636-230-8824. We hear all these rules of thumb about spending in retirement, like you'll need 80% of your working year's income. But a new survey from T. Rowe Price found many retirees are actually living on closer to like 66%. So, Steve, when you hear that, what is your first reaction?
My first reaction is somebody says, that I believe I'm going to live on 75% of my income. I'm going to sit here and say your total income, that might be. But what part of your expenses are you not going to be doing? If your after-tax income is X, now you're going to retire. What are you not going to do when you retire? I get very few people, they'll say stuff like, well, I don't have to go to work. Most people aren't buying suits and ties to go to work anymore. You might have to drive, so you might have gas, a little bit more wear and tear on the car. So it's like, what are you not going to do? Not a whole lot of things. What do you want to do Well, I want to play golf more. I want to go see the kids. I want to travel. Most of the time when people look at that first couple of years of retirement, they're going to spend more than they were when they were working. Why? All those things on the honey-do list that didn't get done, they're going to start looking at those and getting those done. I've got time to do this stuff now. So the spending usually in those first couple of years of retirement is actually higher than where it's at. How are you going to replace your income? If you've got pensions, Social Security, and that covers your basic lifestyle, great. If not, and there's a gap, I would prefer to guarantee it. And then I have my retirement savings and my non-qualified savings. Those are for the extras in life. And that's where I'm going to sit here and say most people forget when they start to look at those two numbers about inflation, how my buying power will go down the years in the future. So I'm going to sit here and say, one of my friends used to say the three most important things in retirement: income, income, and income.
That's right.
How are you going to get it? If you can guarantee it, that's fantastic. If you're not sure exactly how you're going to replace your paycheck, give us a call now. Ask for that income plan. We can look at it. Do I want it guaranteed, or will I just pull it out of my portfolio? I would rather you know that before you make the decision to retire than try to figure it out after you're retired. Again, call, ask for the income plan.
That income plan, guys, is going to give you that answer of how to replace that paycheck. A crucial conversation here moving forward towards retirement. 636-230-8824. 636-230-8824. Steve, something we talk a lot about is a tool called rebalancing. But what does it mean for you when it comes to your retirement portfolio? Here's Morningstar's Amy Arnott.
Rebalancing usually will involve selling assets that have gone up because they would be over your target levels and using those proceeds to buy into asset classes that have gone down. And why that can be difficult is sometimes if things are going up, people are reluctant to sell. And in fact, you could miss out on some gains if you sell for rebalancing purposes. So the purpose of rebalancing isn't necessarily to improve your returns, but really to control the risk level of your portfolio so that it doesn't drift too far away from your target levels.
Okay. I mean, I can see where she's coming from here, but it's estimated that about 30% of those nearing retirement never rebalance their 401ks or their IRAs. I already know that's a huge problem, Steve.
Oh, I think one of the funniest one is Bill and Sherry had come in. I knew them personally. They came in, and I always ask that question on a scale of 1 to 10, where are you at on the risk reward? Sherry was a 2 or a 3. We did the Morningstar report. She's 95% in equities. We bring them back for that analysis meeting, and we sit down, and I ask her that. I said, Sherry, you stated you were very conservative, a 2 to a 3. And she says, yeah, I am. And I went, you're 95% in equities. She goes, oh, I set my 401k up 35 years ago, and I've never changed it. I think that Amy put it perfectly. People are afraid they might lose some return, but when markets get too high, the chances of them going down, and if 80-20 is where I wanted to be, and the market's been up, I might have a 90-10 at that point. So I'm taking more risk, and then if the markets are too low, if they don't rebalance when it turns to go the other direction. So I think rebalancing the portfolio is the most important thing. That's what I love about our management styles. Static. Adjust for what she called drift. I've got more risk in there than I should. Or if I'm really want tactical management, I think that's awesome. Our target date funds, they'll move away from the market when the mathematical models say it's time to. So it covers people and gives you that feeling that you're not going to experience a 2000 or a 2008 again. So if you're concerned that you might be taking too much risk, give us a call, ask for that risk reward analysis, allow myself and my team to analyze where you're at and is that within your comfort levels.
Thanks for listening to the All Financial Hour podcast.
Insurance products are offered through the insurance business All Insurance Group, LLC, AIG. All Financial Group, LLC is an investment advisory practice that offers products and services through Impact Partnership Wealth, LLC, IPW, a registered investment advisor. IPW does not offer insurance products. The insurance products offered by All Insurance Group, LLC, AIG are not subject to investment advisor requirements. IPW and All Insurance Group, LLC, AIG are not affiliated companies. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual's situation. All Financial Group, LLC is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by All Financial Group, LLC.
This radio show is intended for information purposes only.